So once you download the sample budget from the file below, this is what you'll see. And essentially, you can fill out anything in the yellow. But it's important that we're just going to start with 1 month and work on those expenses, and then expand that for the next 3 to 6 months to get an idea of what expenses we should be expecting. And since this is a brand new business, we're guessing on some of these things, so it's going to change over time, and that's okay to adjust the budget. But this is just to get an idea of how much income you need to generate in order to hit the monthly numbers that you need to. So let's just start with overhead expenses. Let's just start filling in the amounts we expect for advertising and marketing. Let's just say in the first month, we're going to advertise pretty hard. So we're going to do maybe $250 in the first month on just regular traditional advertising. Google ads will be about $1,000. Any printing or direct mailing, not much. Let's just say $100. I hope that I'm not paying any bank service charges initially. I actually do have a car payment that I want to put in here, so that's $350. Gas, probably about $50, maybe $100 a month. Computer expenses. Again, this completely depends on how you categorize things, but computer expenses for me are Apple purchases, small, one-off little things. I don't expect this to be anything significant every month, so let's just do $50. Website hosting, this is huge. So this is expensive for me. So this is I think it's $2.99 per month. My other dues and subscriptions, this is things like QuickBooks subscription, Airtable, scheduling software, anything that you pay a month, Spotify, anything for your business that you use to generate income. So let's put in, I actually have no idea how much in total subscription, so let's just put in 100 for now, and we can always adjust later on. Scheduling, I don't have a separate scheduling software, so I'll leave that blank. Employee gifts, I don't expect on a monthly basis to be giving my employees any kind of gifts. My business insurance, this is paid monthly, and this is $180 if I remember correctly. Event insurance, this is going to be to only certain types of businesses. I'm going to leave this blank. Workers' comp. So I do have some employees. However, I actually realized I don't have payroll taxes listed here. Payroll and payroll taxes listed here. So I'm going to drop 2 lines, which is perfectly fine. And let's just copy this, and I'll type in payroll, employees. Remember, as the owner of the business, you're not allowed to put yourself on payroll unless you're an S Corp or a C Corp. This is not payroll for yourself. And then with employees comes some payroll taxes. So let's just assume my payroll for my employees is about $50 per month. I just have 1 employee for now. And you can usually assume about 10% for your payroll taxes. So I'll just do a formula for that. Now my workers' comp, back to that, that's $50 a month. Any miscellaneous job supplies that you have to get your job done will be put here. I'm going to skip this. My legal and professional fees. So I do pay my accountant every month. So I can count on that $300 a month as the expense. Office supplies, this is a great catch-all for everything else if you don't know where to put it. Usually want to estimate high because this can grow substantially. Parking and tolls. I don't expect I'll have anything. Let's just put in $20 a month. Payroll processing, you can assume that's about $100. I won't be doing any recruiting that I know of. My rent is $2,000 a month. No repairs and maintenance on the property itself. I'll leave that blank. Shipping and postage, I don't think I need anything there. Taxes and licenses, none that I'm aware of. Traveling, let's just say maybe on average, seems light, $350. We do have some conferences and things coming up. Uniforms, this is like anything branded. This can also sometimes go in advertising and marketing. But let's just allocate $75 per month. 75. Any utilities? Yeah, I'm in charge of the internet, but that's down here. So internet, that's going to be $150. Utilities, so gas and electric, I am in charge of. So let's just assume $300. And then telephone expenses. Now these, my cell phone bill plus the employee, let's just say conservatively $200. Again, these are rounded off numbers. They are going to change. And even, I don't really even like that 75.49 that got created with this 299. So I'm going to change this. So 75.50 is what my October overhead expenses are. So regardless of whether or not I make a sale, essentially this represents what will be owed. So every month I have to come up with approximately 75.50 in payments to pay these expenses. So that's very important to know. Now, before we kind of back into what sales we need to generate to make this happen, let's also handle some very important things down here. Now, these are items that don't show up on your profit and loss. These are actually items that affect you personally and also affect your balance sheet. So first of all, if you pay down principal on debt, that's not a business expense. Only the interest portion of that pay down is a business expense, but the debt portion, the principal debt portion, still needs to be paid out of your bank account, out of the net income that you generate. So let's say I have a bank loan and every month I have to pay down that loan. Let's say it's $750 and 500 of that is going to be towards the principal, and the other 250, I'm going to drop a line here for interest. Interest on bank loan. So $750 in total will come out of the bank account. We'll get credit for $250 of that payment on the P&L. And the other $500 will just go towards paying down the principal on our balance sheet debt. So basically it reduces your liability. But that's very important to know because that's still cash out of your bank. Now you can see I have a formula here that basically takes 25% of whatever your net income is and allocates that for an amount you'll probably owe on your personal income tax return for that profit. Now 25% is totally an average. Some people are going to pay 20% in total, fed, state, and local. Other people are going to pay closer to 30, 35. So based on your tax situation, you want to change this number. And also, so in addition to that, the last thing is you want to pay yourself, right? How much money do you need to bring home every month to pay for your personal expenses? And this is why it's important to do the same exercise, your personal expenses as well, because you don't want to be completely blind to what you need to bring home. You want to make sure you bring home what you need to live comfortably, but also leave enough money in the bank account where you can grow and save and plan for the future. So let's just say you need to bring home $3,500 every month, and that'll be comfortable for you to pay your rent or your mortgage, any other food expenses, clothing, other miscellaneous household items. All that stuff will be covered in that $3,500. So obviously everyone's situation is a little bit different, and those amounts will change as the years go on and everything gets more expensive, but that's a good ballpark to kind of gauge whether or not you're going to be able to satisfy all these cash requirements. And I actually just made a formula. So the personal income tax section will only calculate if there's a profit or a net income for the month. If there's a loss for the month, it won't calculate anything here. So you can see it's just adding your total additional cash outflow of $4,000. And right now you're cash flow negative for the month by $11,800, which is not what we want to see. So now we need to figure out how much income we need to generate so that we're cash flow positive. So this is why it's really important to understand your cost of goods sold percentage, right? So it's very important to understand what it takes for you to make a sale. For October, I want to try to generate $18,000 of income. Let's assume maybe $500 comes back as a refund, and I'll sell some amounts online as well. Nothing significant, so $1,507.50. That's $1,875. And right now I have these formulas here showing your cost of goods percentage and your gross profit margin. And this is what we're going to use to basically double check to make sure our assumptions are correct. So if I'm selling 1975, I know it's only going to cost me about 13,000 in items sold. I expect maybe 9,000 in items sold. I expect maybe another 500 in albums, 750 in prints. Subcontractors would be about 1,500, and shipping maybe $100. No event expenses, and this is exactly what I wanted. I have a gross profit margin of 40%. So I know that it costs me 60% just to make a sale. So the rest is mine to keep. So right now, with a gross profit margin of 40%, I have gross profit. So after selling that $19,750, the money I have left over is $7,900, right? So if we scroll down, which is the $19,750 minus the $11,850 gets me to $7,900. So if we scroll down, we talked about our expenses are $7,800 because we added in the interest of $250. So I'm left with net income of $100. Okay, that seems great, but let's talk about the other cash flow out items that we need to account for. We have $4,025 that we need to account for, and we don't have the cash to cover that. So that's coming out of our savings. Not great. Not kind of how we want to set up the year. So maybe we actually need to make $21,000 of sales. Maybe that equates to $600 of refund. So let's bump this up until we get to that perfect. Almost there. Perfect. So now our gross profit is $9,050. And if I scroll down, now we have a net income of $1,250, but still not enough cash. So what does that tell me? We need more. We need more sales. It's the only way to increase. Either we increase our sales or we decrease our costs, right? So let's add another 2,500 there. We finally found the correct allocation so that we actually show positive cash outflow in this year. And this is, again, mainly the main issue was that every time we bumped up this income, the personal income taxes also increased by 20, right? Because every time you show income, more income, you have another 25% that you're saving for personal income taxes. So again, this is totally optional. You don't have to account for your personal income taxes in this, but I know at least in the beginning, small business owners like to have an idea of how much in taxes they'll owe because they don't have the luxury of having Fed tax withheld on their payments. They get the money directly. They don't have any taxes withheld on it. So they're going to owe a ton of taxes. And this is kind of a good barometer to keep an eye on your tax situation and understand what you might owe after the whole month shakes out. Now, all we need to do is copy this. So we found something that works, something that's reasonable. Again, totally adjust any numbers. After you run through your expenses and you're like, man, I really can't get to a positive cash output for the year. You got to adjust your expenses, reduce payroll, reduce advertising maybe. If you're increasing your costs, that might be another option. Instead of trying to chase more sales, just increase your prices by a couple $100. Every time you sell something, instead of trying to get and find and acquire more customers, just increase the sales. And maybe that's the way out. Or try to decrease your costs somehow. But let's copy this month. So I'm going to copy the whole column here to November, December, January. Expand these. November, December, January. Now we have our base set up here, right? So we're always going to be showing this net cash of, over those 4 months, it's $50 of total cash that we'll be adding to our bank account. But that might not be the case because in November, we're going to get a little busier, right? So people are going to start loading up for the holiday season. We're going to be expecting more in income for sure, which again, we're going to keep checking our formulas to make sure we're right in line with what we know we can produce. And obviously, I just keep adding to items sold, but feel free to break this out, right? If you're selling more items, you're likely going to have more shipping costs as well. So just keep playing around with this. I also know my payroll is going to go up because I'm going to need more people to work the store in November. I also know that my processing fees are going to be higher because of those extra employees, and I know that I want to give some gifts out to my employees. So $1,000 in November and December. My dues and subscriptions, those are going to be the same. I do have an auto insurance payment of $1,000 that's due in December, so I'm going to add that. So just when you spread out your budget, after you figure out the main expenses that you're going to use every month, and kind of go through here and either delete or add any one-off things. So I know I won't be traveling in December, but I also know, like I just talked about, that we're going to have increased payroll costs, especially in December. And I also know that I'm going to have an auto insurance payment, and I probably want to ramp up my Google Ads for those 2 months because it's going to be such a hot selling season. Keeping an eye on everything. It looks like this is good. I fixed my sales. Oh, I didn't fix my sales for December yet. Definitely going to be higher in November and December. That's about right. And then it'll kind of go back to normal in January. So these are wrong, right? So I have cost of goods sold percentage of about 60% that I'm carrying with me, but I forgot to adjust this amount. All right, perfect. So that's about right for my cost of goods sold percentage. And you'll see here that now we're talking about a net cash into your business bank account of about $1,100 that you're going to be able to save. And that's after collecting $160,300 of income in those 4 months, paying out direct cost of $95,000 to make those sales. Your overhead expenses in total are about $42,225, and then you have all this cash that you kind of have allocated to go elsewhere. So out of this net income of $22,825 over those 4 months, which is awesome, you're going to have to pay out about $2,000 to cover the principal balance on your balance sheet, save some money for taxes, and also pay yourself $14,000 out of the business bank account, which is why you're only showing a net of $1,100 being saved. So yeah, this is a very simple budget, very basic. Feel free to add and adjust anything you need to, but I think it'll be a really good exercise, especially going through this cost of goods sold section, to figure out where you can maybe save some costs and where you need to add some additional income in the months that you're showing that you're going to be a little lighter. And once you're really solid with this budget and you're confident with it, as soon as it's sitting in Excel and it's perfect, you want to take it and throw it into QuickBooks. Because the next step of this is, once you have your budget in QuickBooks, once you start running reports and you also start seeing your actual transactions that are hitting your bank account and therefore your QuickBooks, you can compare, hey, in October, did I really have $1,250 of payroll for employees, or was that double? Because if that was double, you probably need to reallocate the rest of these months too. If you totally guessed wrong, or you completely forgot when doing this exercise about a certain expense that you have, it's going to throw off your numbers. So you got to keep readjusting. So make sure after you book transactions, you know the month is good to go in your books, you're running comparative actual versus budget reports so that you can compare to your budget and plan for the rest of the year so that you can make adjustments and ensure that you're able to cover all of your expenses and pay yourself, pay down your debt, and also pay your income taxes.